You're watching Dukascopy TV for an economic update on South Africa with Goolam Ballim, Chief Economist at Standard Chartered in Johannesburg. So Goolam, South Africa's economy grew at the slowest pace in more than 4 years in the third quarter as labour strikes weighed on output. The central bank also recently decided to hold rates. So what are your views on all this negative economic news for South Africa?
Over the last 4 years, the South African economy has struggled to grow faster than 3%. 2013 is therefore, in fact, a very low year in the sense that the economy will probably grow by about 1.9, maybe 2% at best. Now, this underperformance, even in a generally weak era, is a function of external headwinds, with main trading partners still weak, and also internal dynamics, such as very vibrant industrial strife, and also just a general slowdown in consumers' real income. Over the near to medium term, we do anticipate some acceleration in economic growth, especially as inflation cools, but in reality, whereas the South African economy grew by at least 5% per year in the 5 years before the Great Recession of 2009, over the near to medium term, it is likely to be, at best, growth of between 3 and 3.5% for South Africa.
And as a result of this week's data, what sort of performance are we witnessing in the markets? What is corporate sentiment like, and what are we seeing in the stock market?
South Africa's stock market has, in fact, performed quite handsomely over the last year. In part, even though overall GDP growth is not likely to be better than 2% in 2013, and general growth news has been underwhelming, corporate performance has actually been quite stellar. Corporates have been aggressive about cost containment, attempting to maintain or enhance margins, and successful firms have been encroaching on the market share of others. So, on the whole, you've actually seen a very lively performance of South Africa's stock market, evidencing the good earnings performance of South Africa firms. Having said that, going into 2014, it is going to be difficult for South African firms to replicate this year's performance. It'll be far harder to elevate margins, so much more difficult to find additional avenues to cut costs, and just top-line revenue growth is going to be harder to come by. So we think that next year, the stock market's performance will certainly be less lofty.
And focusing on the Rand, Goolam, how do you see it trading over the coming months, and what will be the driving factors?
Over the next 12 months or so, Standard Bank believes that the dollar Rand will continue to hover around 9.50 and 10.30 as a zone for trading. Of course, the currency can trade stronger or weaker than that parameters, but having said that, we don't think there's going to be material appreciation in the currency, given South Africa still has some fragile fundamentals, notably the current account deficit, which is around 5% of GDP.
Goolam, as always, it was a real pleasure. Viewers, stay tuned as we have plenty more coming up. See you soon.